listening to ZATR Radio. ZATR Radio.
Follow us on Twitter at ZATR.
That's correct. Very right. You're listening to ZA Talk Radio. Hi, my name's Julian. Welcome back to another talk with us this Sunday night. And it's also available as a podcast or a recording on SoundCloud. This week, I've got some fantastic guests lined up with me. We've got, as always, Dr. Faiz Kirsten is with me out of Cape Town. I'm coming to you out of Johannesburg. And another guest, Ken Dost, out of Pennsylvania. So, yeah, we're making a little bit of a connection to the United States this evening. And later on, Jan will join us. And so will Brother Thomas. So let's get straight into it.
Anyway, we have two guests, actually three guests tonight, two of them from South Africa and one from actually Portland, Oregon, not Pennsylvania, Julian.
My apologies.
And we're basically going to be talking about a financial mechanism known as securitization, which I'm sure the listeners are aware of, or some may not be aware of it. But quickly, just to briefly explain, I don't want to take up too much time because Ken is going to be telling us things about this mechanism that to me was also news. I mean, to be quite honest, I wasn't really aware of it, that banks are doing this. I don't know if it happens in South Africa also, but certainly in the United States. I'm sure it happens in South Africa. So basically, it's a derivative structure, whereby banks bundle together a number of different loans and then sell them off to a third party or to third-party investors. And when we use the word loan, again, I must, obviously caution people that banks don't actually lend money, so it's not really loans. But, people, I think by now most people know that, in fact, that is the case. So anyway, and apparently the securitization industries are worth about 30 billion rand here in South Africa. Those are the numbers that I've seen, which is a large amount of money that they're making off securitizing so-called loans. And they obviously don't disclose this information, readily to anybody because securitized loans are basically, when you securitize a loan, you invalidate the mortgage loan, you invalidate the agreement. And also there's non-disclosure that happens. So banks really don't have what we call legal standing or locus standi. Anyway, so...
Tell us a little bit about Kent.
Yeah, we're coming to Ken now.
Okay, sorry, I don't want to cut your train of thought.
Some examples, basically, of securitization, securitizing loans would be, home loans, vehicle loans, credit card loans, etc. And so basically, so as I said, once a loan is securitized, it's impossible basically to retrieve the original documents. And so basically banks go to court with either no documents or with fake documents. And that's just a crazy situation because they're unable to establish true ownership, once a loan is securitized. But as I said, our first guest is going to dive more deeply into the subject. And his name is Ken Dost. He's spent 25 years in the field of architecture. As I said, he's from Portland, Oregon. And he was 10 years in business for himself until the freezing of the credit markets in 2007 that was basically targeted to the design and construction industry to shore up commercial paper from failing. Ken was going to give us a bit more background about himself, but what happened to him with the banks, he basically made him set out on a journey to reverse engineer the frauds that he discovered. He approached it much like designing a building, and what he uncovered was, he describes it as a conspiracy of immense magnitude. So Ken, are you there, brother?
Yeah, I'm here. How are you doing?
I'm very well, thanks. Welcome once again, and thank you for accepting our invitation, our request to be on the show this evening. We really appreciate it.
Oh, I thank you. I think this is a good opportunity to alert the global community, so I'm honored. Thank you.
Yeah, thank you. So, Ken, if you can tell us a bit more about your background, how you got into investigating this fraud by the banks in America, and then we can move on from there.
Okay. Well, our initial initiation with bank fraud goes back to 2001, and I'll kind of spare those details because it's a long story. But we were basically had our character assassinated and our credit assassinated in a mortgage refinance. and forced that. Well, essentially what happened was we had our homeowners insurance canceled, and it was canceled because U.S. Bank failed to make an insurance payment they were obligated to make by contract. And of course, once your insurance is canceled, it's canceled. You can't get it back, and nobody takes any kind of responsibility for it. So what essentially happened was that forced us into a subprime loan. So in 2007, when the credit markets froze and basically put me out of business, I sat around, and there was no, of course, the following years when the general economic collapse came in 2008, so there was absolutely no chance of gaining employment or even finding any jobs whatsoever. So what I did was I started investigating this, and I started looking into the mortgages, and I came across a phrase that I believe it was something to the effect of inure to the benefit, and that phrase rang true with me. I saw that phrase somewhere before, and I was trying to remember, where did I see this? And a couple of years earlier, I had designed these architectural style type doghouses that are prefabricated, and I had filed a provisional patent on it, and I recall that's why I saw that phrase. It was it was using this in my provisional patent application.
Sorry, Ken, can you tell us what that phrase is again? What is the phrase?
It was inert. It was inure to the benefit. INURE, and that's the phrase that rang with me and clicked with me, and it clicked with what I had done with the provisional patent. So I started looking to the patents and started going through just basically open up the USTPO patent database and started browsing through there, and I thought, oh my God, here the banks, they patented everything. The Bank of America, JP Morgan Chase. I mean, I found all these patents for everything, all financial services, insurances, and whatnot. So then I started, and I broadened my research and began looking into the SEC documents, and began looking at trademarks. And next thing I knew, I began just basically reverse engineering the whole system. And I remember back maybe 5-6 years ago, I had a friend over visiting from Idaho, and I had him over to show him and describe to this. And I couldn't, back then I didn't really have a full understanding of it and couldn't describe it fully, and still was kind of piecing together pieces. But I told him, I said, guess what? These are patents. These are trademarks. We got screwed by a virtual world. And he looked at me like I was insane. And as a matter of fact, he did. He left the house thinking I was insane. And then a few years after that, as I put this thing more together and began to put it together in a more, I could describe it more intelligently and put together all the evidence on it, it's kind of changed now. People are starting to listen and starting to understand that these are, in fact, not what they're portrayed to be. So basically, I did reverse engineer the system, and basically everything all the frauds that we're seeing, and what people don't see, and what they need to be seeing, is right before us. It's right there, recorded in your in your patents office and your trademarks office. These have nothing to do with real property whatsoever. So
Ken, what have they patented? Because a patent is basically a government authority or a license to confer a right or a title, for a period of time. So somebody invents something and they apply for a patent. Okay, so they have the sole right to exclude others from making that item. So if I invent a chair, I take out a patent on the chair, for example, and nobody else can make that chair. Drug companies do this all the time. They patent their drugs. So what have the banks actually patented specifically?
Well, what they've done is that, and it goes back to a ruling in the United States here, back to a ruling in 1998, which was a federal district ruling on a patent application between, and the case was between State Street versus Signature Financial Group, and it was over a patent. It was the particular patent was a hub and spoke, and what this is a business process, and the business process described a system of future predictions on particular investments and how to basically avoid paying taxes on these particular investments. And what the program did was it put into the hands of a broker advice that the broker that can then take to his investors and guide them on what investments to make to avoid paying taxes. And what the federal district found, well, let me back up for a minute. In order for something to be patentable, it has to produce a concrete and tangible result. So, like you said, with a chair, I mean, that's something you could feel, you could touch, you could sit in. Most people think of Alexander Graham Bell, maybe, or an Edison, and invention of the light bulb. So you got the concrete, tangible result. Well, what the court ruled was that the results that were put into the broker's hands as a result of this automated business process and those results can be taken to his investors. The court, I don't know how they still, it befuddles me how they justify this, but they deem that as a concrete and tangible result. So therefore, automated business methods are patentable, and that's what started this trend. And prior to 1998 in the United States, there were only a handful of financially driven automated business methods, and mostly it was really like ATM machines or mechanical things that were actually concrete and tangible. Post that ruling, though, we now have thousands and thousands of patents. For instance, Bank of America, between I think 2003 and 2008. If I'm not mistaken, they have over 897 patent applications. That's just in those few years. And what these processes are different financial products, are loan underwriting programs, our credit analysis. It's everything that you would having a traditional mortgage, as far as your loan underwriting standards, but it's automated now.
So would you describe this as a software program that somebody's created, and now they've patented that? Would that be a fair thing to say?
Yes, it is. That's exactly what they're doing. What they've done is they've used financial patents and financial instruments, software programs to engineer processes to basically fix the economy to their liking. And what I mean by that is you can take a business process or a software method and basically engineer a financial product or engineer compliance or false compliance like RESPA. Or TILA, and basically engineer your way around it. So what they've done is they engineered processes that give the appearance of being compliant, but in fact are not compliant whatsoever. And a lot of that is because it's kept secret. And I guess to characterize the whole thing, the whole mortgage lending industry, and really beyond that, I mean, the cars and student loans and credit cards, so on and so forth, is that it's one big trade secret, which is, of course, what patents are. Patents are before a product is patented, the persons that are seeking that patent try to keep it a secret, and so they've done this to the whole industry, globally. Yeah, because I would imagine they don't want anybody to copy that, and so if I'm a pharmaceutical company and my scientists, invent a new drug, then I want to keep that patent, that mechanism, secret, because I don't want anybody to copy it, even though I have a patent on it, right? So these guys have done this. They've created these programs. They've patented business processes, and now they're keeping it secret. Is that what's going on? Basically, what you're saying? Well, yeah, that is what's going on. I mean, we naturally assume that a pharmaceutical is going to be a patented product. I mean, that's a natural assumption. Yeah. I don't think anybody assumes or makes a natural. Nobody assumes that these processes are actually patented, and it goes beyond that. It goes into what does a patent, what does it actually mean in terms of loan underwriting, and that's where the big secrets are. That's the big veil of secrecy here. That and what it is one mass deception. By portraying a traditional mortgage, that is the paradigm. That is like the loan that my parents got and your parents got in terms of signing a document, and this document is sold to an investor, and there's nothing else that's done with it. You pay your monthly payment, and that's it. What they've done is and you just keep paying, and of course if you default, you embark upon foreclosure. But what they've done here is they've actually made us the commodity investment within these patents and within these processes.
Yeah, because most people's understanding is you go to a bank, they lend you some money, that's the loan, then you pay it back over the next 20 years or whatever it's going to be. You pay some interest on that, and that's it, Most people don't understand that, first of all, banks don't lend money, and secondly, they don't understand that loans are securitized. Now there's a new system, there's a new issue here that they're actually patenting this entire process, basically, and copywriting it, like you said earlier on. How does that affect the person who actually has the loan with the bank, or the so-called loan, Ken? How does it affect? Yeah, there's millions and millions of people who have loans, or so-called loans. What is the direct impact on us?
Well, the direct impact on us is it's not. First of all, it's not a mortgage loan. It's not a loan of any sort. What it is, it's a conditional sale. And let's back up to securitization for a minute, and let's define what securitization is. Most people believe that securitization is the pooling of loans the gathering of loans into a pool, and that pool is then sold to a Wall Street investment bank or an investment bank in your country, from there it goes through a securitization process of transferring the assets into a created bankruptcy remote special purpose vehicle, from out of which our certificates are sold. Now that's most people's understanding of securitization, and by and large that is partially true, but of course, what they've done here is they've educated us on what they want us to know, and not what it actually is. What securitization actually is taking a financial instrument and breaking it into at least two separate components. The first component is an option, and the second component is a remainder interest, and that remainder interest is an insurance policy. So the effects that it has on the person that is signing that document is that they're not getting an actual mortgage loan. They're not getting any money whatsoever. As a matter of fact, what they're doing when you sign your name to this document, you're creating a derivative. You're creating the most basic form of a security is a derivative. And so when you hear of all these CDOs and CBOs and CDOs squared and credit default swaps and all these other crazy investments that they've created out there, those are all forms of derivatives. Well, the most basic form of the information that makes up that derivative, which is a business process. That derivative, if it's a mutual fund, it has a patent that it's based on. So it's a particular series of steps that it goes through a patent that creates this derivative. Well, the basis for that derivative is information, and the information that they're using for that goes back to the very basic form of derivative, which is our personal information, our signatures that are based on that document that we sign. So what happens? So the effect on a home buyer or homeowner is that they don't have ownership. Number one, it's a facade. There is no ownership. They stripped ownership of you. What they've done is they've made you a lessor upon your own land, and by holding this derivative, a derivative is more valuable than a loan sale, because a derivative, the person that's holding that derivative can do anything they want with it. And what I mean by that, they can sell it to any kind of other fund, to a mutual fund, to an insurance company, to anyone they want, to create any kind of financial instrument. So the home buyer, the homeowner, is severely damaged without even knowing it. So
there's so many questions that come to mind, Ken, as you were speaking there. I don't even know where to start, quite honestly. But what you're saying is they create these options and then they sell off these options to maybe many, many different investors. That's the first question I wanted to ask you. Is this correct, Ken?
Well, what they do is, yes, what they do is when you fill out your loan application, it actually begins with your loan application.
Right.
Your loan application, when you fill that out, you automatically are putting yourself into the system, and the system is their security system. They create an option on that particular loan application, and that really is the basis for what type of loan you're going to get in terms of what your option is going to be. Now. Your option would be in these exotic instruments, your 228s or your 327s, which is your 3 years fixed interest that then rolls over to a variable interest rate. Now, what they're selling there is they're not banks aren't giving any kind of a loan. What they've done is they've taken this loan application to market, and it's been bid on by investors, by sometimes private investors, so that they can basically fix it to buy it back later. But what they're actually, when you sign that loan application, that option is a conditional sale that somebody offers to purchase that loan at some future point in time. So if the option, for instance, is a 3-year option, an investor is holding an option over the purchasing of that mortgage loan at the expiration of that 3 years. So the assumption is going to be that you're either going to refinance, or you're going to default, or you're going to try, or you default because you can't refinance. And so that person that has that option, therefore, then has control over that derivative, because there is no loan sale. You understand what I'm saying?
Yeah.
Does that make sense?
Yeah, absolutely. Yeah.
So they're making money hand over fist off of a derived electronic copy of that paper signed document.
So they could, in theory, they could make off one loan, say a $500,000 loan. How much could they potentially make off that one loan then, Ken?
In mine, I figured that they made over 30 million.
Wow.
There's a person Rod Class in I think Virginia, South Carolina. He can prove that they've made over $93 million off of his $500,000 loan.
Wow.
So the amount of money that's being generated off of this is absolutely incredible. And it's all derived.
Yeah, okay, go ahead.
No, go ahead. I'm sorry.
The bottom line is, I mean, I would imagine that nobody knows about what we're talking about now when you go out and take a loan from a bank. So in other words, this information is not disclosed, and based just on that specific issue, doesn't it invalidate the loan just from the get-go?
Well, I would think so. I would think so. I'm not an attorney. I'm not a lawyer. Don't have any law school behind me or anything. But from my research and investigation into this, it comes down to the most basic form of I guess democracy, really, which is the agreeing between two people, and the ability of one to have a mutual assent, or the ability to have mutual assent onto what's being sold and what's being purchased. And that, frankly, does not exist here, because when you're going through this mortgage lending process, you're assuming that you're getting a mortgage loan to real property. You're assuming that you're going to get monies of a particular amount for the purchase of real property, and then you're going to pay that back. And so you're assuming that there's mutual assent there because that's the way that it's portrayed as. But the fact is that the transaction lacks mutual assent entirely, because as a reasonable person, it's your duty to conduct due diligence. But if you can't discover what the actual transaction is, not because of what you're doing or what you're not doing, but for the simple fact of the person that has that knowledge is intentionally hiding that knowledge from you.
Yeah, absolutely. Well, it's misrepresentation by non-disclosure, I think they call it, in legal terms. It's misrepresentation by non-disclosure. I mean, in a contractual agreement, both parties need, all the information that is required to make that a valid agreement. So if the banks are not disclosing, material information, which they're not doing in what you just described, then, to my mind at least, that invalidates the agreement right there.
Yes, I agree. I would agree with that. The way that they're prosecuting these foreclosure mill attorneys, they're coming into the courts under UCC 3, which is a negotiable instrument, and therefore, as such, a negotiable instrument needs to be endorsed at every step of the way for complete chain of title. But there's one section of the UCC that 301, I believe, which states that even a thief can steal your home. So in other words, I can go down to the county and I can make copies of my neighbor's deed of trust and note, and basically serve them with foreclosure and tell them that I own part of their note and I own their note, and because I have the piece of paper. And that's basically what they're doing here under the UCC 3. But the fact of the matter is, it's not a UCC UCC3 negotiable instrument. It is a derivative, and a derivative is a security, which means that there must be a documented chain of title, and they have to follow a certain framework that is totally blown out. And you're right. The minute that with disclosure, discoveries, yes, it should invalidate that contract immediately.
I mean, if a third-party investor buys a loan, for example, and there's no agreement, there's no contract between the person who's taken out the loan and the third-party investor, there's just no agreement. How can the third-party investor foreclose on the loan taker's or the borrower's property? It's just guys, it makes absolutely no sense.
Guys, you know what? There's a lot of things we're touching on here that I think maybe a lot of people, because you remember this is also available as a stream afterwards. A lot of people might not be savvy to some of these ideas that we're talking about. And when you say UCC, you talk about Uniform Commercial Code. And I'm just to bring it back to a layman's understanding, because we are actually all laymen here, but I promise you guys sound like you're part of the bar at the moment. And and
well, let me give an example. Let me give an analogy if I can, because yes, you're right. It's got to talk simplify it a little bit. So if I can, let me give an analogy. Let's say that you want to make an investment and you want to buy a hot rod vehicle, brand new. Let's say a Dodge Challenger or whatever would be your vehicle down there that it would be of great value down the road. And let's say that you don't want to drive that vehicle. What you want to do is you want to save it. You want to preserve it. So what you do is you drive it. You drive it down to your local storage facility, and you just park it in there, and you lock the door, and you walk away from it for 10, 15 years because you want to be able to come back years later, and you want to just drive out a brand new vehicle that is 15 years old that you think is going to be very, very valuable at that point in time. So you make an investment. So you think it's going to grow in time. Well, you go down after 15 years, you go down and you unlock the storage shed and you pull up the door and you discover that this brand new vehicle has dents all over it. It's got the odometer has 180,000 miles on it. The tires are worn. The engine is grimy. The whole vehicle has been just totally trashed. And what you come to discover is the manager of that facility has been leasing that vehicle out to anybody who's paid him money for all these years. And now the manager, of course, is gone, and you've got a worthless investment. What you invested in is gone. So it's the same thing with the mortgage loan. When you purchase a piece of property, you expect it to increase in value over time, and you don't expect it to be destroyed. You expect that to be the exclusive use of you because you're the owner of it. And here you come to find out that what's been done here is your ownership of that property has been totally destroyed by others that have come in and have used it for profit or for leasing out. Yeah. So I mean, it's a pretty good analogy. That's a pretty good analogy of what's taking place here.
I've seen your post. That is a really nice analogy. And I mean, we're gonna have some other people join us at this point in the conversation. I mean, not that we've covered it by any means, but we like we say, we keep saying we want to start a conversation here, and we want to share knowledge among yourself and our local guys here, and also start a conversation with anybody else out there. So if you are listening and you've got something to add to this, by all means, you can just write a little piece of text in the chat page that's on the top of our webpage. There's a little chat room available there, and you can also phone us on 072 4199 700. We welcome. We're fielding any calls today, and just starting the discussion. But also, I wanted to come back to a very simple idea here. You guys were talking about a patent earlier. You were talking about them patenting this the loan or whatever, and then selling it on. But as far as I'm concerned, to be honest, to simplify it even more, they've patented the whole idea. They've patented. Okay, the whole idea of banking. Only they issue out the license to be a credited, whatever they call it, financial services provider. You know, that's the kind of thing that jings on all our ads here in South Africa. And
you said
But
You
for
said a
instance,
key word.
they can use UCC, but I'm yet to meet someone that successfully makes use of the Uniform Commercial Code, that makes use of Bill of Exchange. You know what I'm saying? But they use these things all the time, so it's terribly one-sided. Even if we don't get as deep as the securitization of loans.
Well, you mentioned one word, licensing, and that's a key word here, licensing. That's exactly what they've done. They've created the entire financial services, the entire banking, the entire investment, and the entire credit. Everything is an automated process now. As a matter of fact, it's a seamless automated process linked together, and it's served by licensing agreements. So when you sign that mortgage loan agreement, what you're really signing is you're signing a licensing agreement in which you're allowing them to use your signature, that derivative, for whatever purpose they want under a licensing agreement. So, and a licensing agreement, of course, a lot different than a mortgage loan.
Yeah.
Yeah, but the thing is, we never gave them permission to use our signature in that specific way, and that's where the misrepresentation comes in. Yeah.
That's correct. That's correct. You mentioned earlier about we spoke offline about banks. I asked what the four major banks are in your country, and one of the banks you mentioned was Barclays. And I have a few of the Barclays patents here, and the one that really applies to everybody globally here in the United States as well as in your country is a method of registering multiple financial products within a single prospectus. Now we're conditioned to in the defending of our homes. The first thing that we look to is the PSA, the pooling and service agreement per particular trust. And what Barclays done is they have created a patent that records that initial investment, but then creates supplements to that prospectus supplements that are recorded and non-recorded that describe the additional investments that make up this initial pooling and service agreement. Those include your common stock, your depository shares, your guarantees, your notes, your preferred stocks, purchase contracts. So what you have here is you have multiple frauds going on here, multiple deceptions that are buried behind one base supplement or one base prospectus. And these are the things that we need to uncover, and we need to get out there so people become aware of how easy it is for a patent to take information and basically use it to their advantage unconditionally, to our detriment.
So Faiz, are you still with us there? Have we got Jan on the line yet? Sorry, I don't want to cut your thought or whatever. Jan, are you with us?
Ken, yeah. Yes. We got thanks Ken for that. Stay on the line, Ken. We're going to be just introducing our next two guests, and then the three of you guys, can have a nice discussion on this topic. But I want to bring in Jan and Brother Thomas now. Brother Thomas has been with us before. Everybody knows him as the People's Attorney. Brother Thomas, are you there?
Hi, Faiz. Yeah, I'm here.
Yeah, welcome, brother. Welcome, brother. Thanks for joining us this evening. And then we also have Jan Lohfeldt. Jan Lohfeldt is, I think a lot of people listening this evening will know Jan. He's been very active in what we're talking about, in the banking shenanigans that's been going on for a while. Jan, are you there?
Yes, good evening, bank busting gentlemen.
Jan, okay, we'll start with you. Jan, if you can just give us some background as to who you are, what you've been up to, and then we'll get cracking. You can, let's go, Jan.
Yes, I'm quite intrigued. I'm actually just blown away what Ken was disclosing. I mean, it didn't really surprise me. I mean, quite frankly, I would rather listen, to more of his side of the story back in America. But just to give a quick recap on myself, I was an ordinary first-time home buyer about 3 years ago and got forced into buying a house, never thought about it, paid the alleged loan mortgage agreement for about a year, and then discovered through a new era, new economic rights alliance, when I defaulted, had a bad winter, couldn't pay, tried to make arrangements actually to call the mortgage provider and make an alternative arrangement, which they declined. And within the same few days, I've heard about securitization, that long word, for the first time, and that's how the journey started. It was about 3 years ago, and it's all around. I'm dealing with SA home loans, and as the name, openly displays, they even call themselves SA home loans, but they're just like a fancy name on paper. And what I've then started discovering about these guys is more than shocking, and it also ties very much in with what Ken said, because SA Home Loans is effectively 45% Standard Bank and 45% JP Morgan. And JP Morgan, as we know, Morgan and Chase, they've been running at the forefront in America, on the securitization market and mortgage market and mortgage fraud and all that. So, it all very much ties in. And basically, these guys from SA Home Loan, they started securitization here in South Africa, and it was one major deal, I think, in the mid-90s for like R1 billion or something that went well, and then the banks got onto it, the 4 major banks, and then this company, SA Home Loan, was basically created, or a new guy took over in 2001 or 2, and the first SPVs were created, which is Blue Banner and Blue Ground, and all these other fancy fictitious entities. And their entire business model and success is based on securitization alone. So they have never really engaged in any true lending or in any money affairs as such. So, they work in connection with the Reserve Bank, because the entire South African Reserve Bank is basically run and controlled by JP Morgan, because it was set up in 1921 by Cecil Rhodes and JP Morgan, or their offsprings, their kids. They carried on, because both of them died, I think, in early 1900. And so this is kind of one scheme where a lot of people also shy off, because I've been talking to attorneys, advocates, legal advisors, got screwed and taken for a ride here and there, then basically leading to the journey of self-empowerment. And with Brother Thomas, we started to represent ourselves and helping people to represent themselves. Because as we now know, taking any attorney or advocate, and they're not there to help you, they just serve the same corporation, the Crown Corporation. And basically just speaking to a lot of these people, and all of them were telling me, no, SA Home Loan, sorry, they got it right. And until today, no one's really, there's Dennis Jenkinson, I think his property is also up for auction next week, so he's also losing the battle. And these guys got very clever. So, and I don't know if Ken is familiar with this, because this is an entity that kind of comprises of 200 entities. They've got something called the SA Home Loan Guarantee Trust, SA Home Loan Pty Investment, SA Home Loan Pty Ltd. Then they've got like a whole bunch of trustees under fancy names of changing type, 17, 19, 25, 27, up to 1,000, whatever. Some of them are registered at someone's holiday home up the coast here in South Africa. Then they've got another branch, which is the Tikwini Warehouse, 1, 2, 3, 4, 5 to 11. So they're really, they've set this up in a way that it is extremely complex and complicated. And obviously they've got the whole trustee relationship. It's insane. I mean, you have to give these guys kudos. And eventually, I thought, wow, this is actually quite amazing. And they've been sailing in multiple grey areas that are just not legislated. We've got the National Grey Regulator Banking Act, and I made a complaint, I think, like three years ago, to 22 consumer protection bodies, ombudsman, financial service ombudsman, and all these guys who are dealing with the financial system or financial institutions. None of them claimed jurisdiction over SA Home Loan, and that to me alone, it's because even we know in South Africa, securitization as such hasn't even been legislated. There was a notice in the Government Gazette in 2008 that they said, well, this is what we're doing, but it hasn't been formally been legalized. And that's kind of, they've been dragging it out, and they've been getting away with this, ever since. I mean, this includes the 4 major banks with SA Home Loan. And SA Home Loan's already, they're not even doing traditional securitization. They've been embarking on synthetic securitization, which is even more obscure, where there doesn't need to be a session. They don't even need to cede, the agreement or the title. And now we know, according to contract law and all this, that the title needs to follow the node. And this is what Ken also earlier said, that's where the problem is. Where's the title? Who's got the title? You speak to various people. Some say no, the title's with the attorney. Some say it's with the court. Some say it's with the deeds office. Some say it should be with you, and someone else says it must be with the mortgage provider. So there's a lot of discrepancy going on, and I'm really hoping, At the moment, we've got this commercial crimes unit who last year actually turned down a couple well-known who also exposed to mortgage fraud, and they looked into 600 mortgage bonds, of which none of them are actually correct. And I've been pointing this out. I went to the NPA, National Prosecuting Authority here in Cape Town. They've got an office. I did speak to Advocate Lohfeldt. Unfortunately, these people who work in these institutions are still so heavily lobotomized, and they don't want to hear about it. So I mentioned the investigation in Pretoria. Oh, let's just forget about this. What about your agreement? Did you not sign the agreement? Did you not get the house? Did you not get the money? And they're kind of always taking on the role of the devil's advocate, they say. So telling me, well, we have to motivate your matter, or this, this information that you're giving us, we have to motivate us to a court. And as we now know, and we've exposed this with Brother Thomas, I think in various proceedings and cases, that all judges are agents for the banks and basically acting as, acting for the Crown Corporation, which sits in the City of London. And so I mean that's all in a nutshell. And it got until last week. So my home was unlawfully auctioned last year, even though we had constitutional court proceedings that got ignored. But then people bought it, and there were eviction proceedings. I had a tenant in the house, a friend of mine, up until last week, where we brought an appeal, but the people who bought the house couldn't even wait until the legal proceedings were finalized and started throwing bricks through the windows and taking doors and windows out, so that we actually had to vacate the place for our own safety. I mean, the fights, kind of the saying goes, we lost the battle, but we haven't lost the war.
Well, thanks for fighting the good fight, Jan. I know what you've been through. But this whole thing is basically, the only word I can use is criminal, because there's no other word that comes to mind, really. And it's also fascism, because it looks like the legal profession doesn't want to hear anything about, or the other side of the story. Let me put it that way. They only know the banking side of the story, if there is an honest story, which there's not. What would you say about that, Jan? Or Ken, sorry, you want to come in, Ken?
What? Yeah, the problem here is the fact, and he touched upon it, is the fact that we signed an agreement. Then that's the way the courts are looking at it, and that's the way that everybody looks at this, is that you sign an agreement. You may not owe this person money, but you owe somebody money. And the other side of the argument, or the other argument that goes with that, is that that a person in foreclosure is a deadbeat, liar, and a cheat looking for a free house. Of course, none of that's true. It's all a facade. And in my estimation, in my opinion, foreclosure defense can never ever win based on those two wrongful assumptions and presumptions. And the only way to really fight this is to go directly to the contract, and on the most basic and fundamental of things is the contract, or the agreement between two persons. And by showing that these contracts are illegal, and that exposing the patents and the underlying processes, that's the only way I think we're ever going to win this. And that's going to be by garnering the support of many people, because what did banks and governments fear the most? Angry group of people, and it's going to have to get to that level to force the courts to actually start listening to defendants or plaintiffs if we go after the contracts. But I don't think we can ever win at foreclosure defense. I don't see that as happening, because we've got to corrupt the corruptible contract.
Yeah, that's.
So we won't win. Go ahead, Julian.
So that's powerful stuff. I always bring it back to the contract as well. That's my first point. It's like, where's the contract? Where's, for instance, with the state, I always give reference to the fact that I don't have a contract with these people. That's why I am who I say I am, because I've got the the unlimited ability to contract as a free man.
Well,
BT.
Yes, freedom to contract, yep. Absolutely. But if that freedom to contract has been compromised, and it has been, and we can show that it's been compromised. It's been compromised because we've been lied to, and the information that we need to have to understand what mutual assent is just not there. And the persons that have that information have intentionally locked it away and it's hidden in plain sight, but they've prevented us from discovering what these real contracts, what this real agreement entails, and also too. go into the contract really eliminates, in my mind, it eliminates all the any kind of exemptions or any kind of loopholes that they can jump through, because we're down to the very, very basic element, which is the freedom of the contract and the agreement between two people.
That's my point of departure. It's the meeting of the minds when you have a contract between two parties, and there has to be complete material disclosure, of all relevant information, and that doesn't happen in these loan agreements at all. So for me, it just invalidates everything right from up front. But it doesn't seem as if the judiciary, the legal profession, is interested in hearing this. That's the
yes.
Well,
maybe if I just want to, I think Julian, you want to mute your microphone? I think you know that. Just to explain to you in terms of a unilateral, bilateral contract and contract law and the pillars that form a contract. With SA Home Loan, they play this very, very, very smartly. We got Standard Bank, which is one of the four banks, and SA Home Loan, which is 45% Standard Bank. When you go to bond originator, in my case, I've been offered two deals. One was Standard Bank and one with SA Home Loan. But the SA Home Loan had a 0.25% better interest rate. So you gravitate towards SA Home Loan. They want you to sign with SA Home Loan, which is effectively Standard Bank. And then you've been called into an office with SA Home Loan. You get SA Home Loan logos. The whole paperwork is SA Home Loan, a nice little house in orange colors. And there's a nice young lady who chirps you up, and you start talking about something else. And they put this paperwork in front of you. And immediately I said to her, this is a lot of stuff to read, and it's the most important document I'm ever going to sign. It's for like R1 million. I'm never ever going to loan or borrow so much money again. And she said, well, then take your time. And then I said to her, okay, can I take it home with me? And she said, no, it's only valid for 1 day. That's the first time, because it is valid for 5 days. But as a first-time buyer, you can actually take it home. I can give it to an attorney. You can change stuff and cross things out if you're not happy with it. But then you're under pressure. And I thought, these contracts, they're all generic. They're all the same. And if I want to start asking any silly questions, they're probably going to tell me, well, you want the loan or not. So I kind of obediently started signing initially, and it's about 40 pages, and normally they're like 20, and this SA Home Loan thing is far more complex because there's an indemnity bond which also is being traded as well for the same amount. So they actually got two bonds trading. And I signed initially all this, and I get to the last page, and I say to her, will I get a copy of this? And then I was told, yeah, it needs to go to the head office and authorized, and we will mail you one via mail, and we will email you one. So I thought, okay, both, that's nice. 12 months later, I still hadn't seen a copy. That's when I defaulted and I started digging up and started to find out what's going on. So I asked them for a copy of this alleged agreement. So I get a copy, and now I'm thinking that the lender would be SA Home Loan or Standard Bank or JP Morgan, who are behind it. And it turns out to be this blue banner securitization vehicle. But they put themselves down as lender, which is also brings up one question, because now they apparently lend me directly funds. So this securitization vehicle is acting in the capacity of the bank, which is not supposed to, because they're lending directly to the public. And, then there's all sorts of other questions obviously arising, who are they, where are they? And you find out that Blue Banner doesn't have any address, no directors, they're not separate or 51%, as in like separate from SA Home Loan. It's one big Ponzi scheme.
Yes,
and,
it is.
Yeah. Well, it's just it's mind-boggling what's going on, actually.
but the good news, though, there is good news to all this. The good news is that it is out there. What was just described can be pinned down through their processes, through their patents, and that's the whole point of this, is to expose the patents and to get people reading these patents, because what we're doing is we're chasing around assignments and chasing around these dummy entities whose only address is a computer hard drive, and we're not getting anywhere with these. We don't understand the processes that the information is being transformed and converted to. And the beauty of this thing is that they've laid it all out in their own words, in their own descriptions, that goes straight to the executive offices of these banks, and it's recorded in your patent office through the processes that they've recorded, and through the security agreements of the software and licensing agreements. So it's all out there.
Yeah.
We just got to draw people's attention to it. And yes, it's complex. Obviously, it's very complex.
Yeah.
But
It's definitely all out there. I like that you talk about using you talk about using their own words and their own contracts in the way that they were meant to be used. This is something that I picked up from when I was hanging out with BT quite a lot, and he always gives reference to that. I mean, we were in the process, just to fill you in a little bit, Ken, but we were in the process of filing documents at our constitutional court about a year ago, and also try to gather some critical mass to basically claim and occupy constitutional court as the people. So, I mean, I also just wanted BT to weigh in a little bit on this because he has joined our call, and the idea of this is also for you guys to all connect and to make the network bigger, because, you know, ultimately our end goal here is not to teach anybody how to take on a bank. It's not to teach anybody how to it's not to give you the step-by-step process of putting through an A4V or anything like that. It's just to basically bring awareness to these issues, to the fact that these people are doing these things, and we best wake up to it. We best do something about it. So yeah, just a thought there from me. BT, are you still with us, brother?
Yeah, I'm with you. Hi, Ken. I like your work.
Thank you very much.
Just to get in here, I've done about 4 years investigation, obviously starting with the American system, because we really have no point of reference, no local manuals that were written like Elizabeth Mary Croft and Vince Kahn and those people. So we're still in the dark ages here. Only reference I could find to the UCC in South Africa is investigation into the payment system of South Africa, which was compiled by the Law Commission in 1994. Okay. Faiz has been present in the courts where the judge, the
BT, you're breaking up a little bit there, man. Just go back a few sentences. Just tell us again where you found reference to the UCC. Just because you were breaking up, I just wanted to be clear.
Sorry, it's a document called an investigation into the payment system of South Africa. It was written by the South African Law Commission. Basically draws a history of our Bills of Exchange Act and where it came from. And it's a compilation of the UCC code and the English Bills of Exchange Act, right? Mm-hmm. But our courts, Faiz was present in our courts. We haven't even gotten as advanced as Americans. Where at least they have UCC. They also have the common law jury system. Our common law jury system was derailed in 1969 by the Afrikaners, the Roman Dutch proponents. So we're sitting now with Roman Dutch law, which is supposedly codified common law. But our laws, because it's even states in that investigation that using the same UCC and using the same Bills of Exchange Act, you can have different outcomes in different jurisdictions. Mm-hmm. So the outcome in South Africa can be completely different to what's taking place in the States at the moment. Mm-hmm. So we still haven't done proper investigations into our history, where it all changed actually, and we're just waking up to the Bills of Exchange. Not many people have studied the UCC. I did right in the beginning to get my head around how Bills of Exchange and security certificates work, Mm-hmm. So, we've still been stonewalled in the courts, but there is light, like with the Specialized Crimes Unit, and then we've got a court case coming up on the 22nd of May against Standard Bank. I'm going to be representing the Zederberg family, and it just so happens that the Chief Master of Pretoria High Court, he's the guy who basically stated that anyone can demand presence by the office of the master to ensure that no fraud occurs. So let's see how this is going to work.
That's kind of an oxymoron.
Yeah.
That sounds really funny.
It's getting quite interesting. So the first thing is the first point of defense is that the attorneys were not present at this agreement when this agreement was made. So they have no legal standing to bring the case forward. Standard Bank has to do it, and there need to be witnesses present in the court. You know, sitting with a corporation system where you're standing in a court and there's the plaintiff is supposedly a person. That person is not even present in the court. You know, so there must be a party to an action, and the party who was involved needs to be present in the court. So we're starting right there at the basics.
Well, I think Ken put it very nicely when he said, he said we are chasing these dummy entities whose only address is a hard drive. I think that really sums up the problem. We're dealing here with legal fictions when we should be dealing with real human beings, but they're hiding behind these non-existent entities. Yeah.
Well, I think we got to deal with the material facts too. What does not exist is a foundation of fact.
Yes.
What it's based on is a foundation of BS and a foundation of misinformation and intentional misinformation. And it doesn't matter what country you're in or what laws are specific to that country. What it comes down to is the actual facts. And what are the facts? And understanding the facts, understanding that these are not what they're portrayed as being, and start understanding the at least have an awareness of the patents and the awareness of what the patents are doing, because it's a roadmap for calling BS to the courts, basically by just laying down the information. These are the material facts. This is what's going on here. This is not a contract, and to me, it seems futile to be chasing all these assignments and all these false entities when we have no knowledge grounded in fact, and that's what's been hidden from us. So that's the whole point of my speaking out, is to get people to become aware of what these actual facts are, so that everybody else can act accordingly with the courts or devise legal strategies with these courts that are going to force them really to take notice of us.
Well, we have to address the judiciary, because, you're absolutely right there, Ken, about the facts. But when the judiciary doesn't want to acknowledge the facts, we went to the Constitutional Court. We gave them all the evidence, first of all, that banks don't lend money.
Well, I agree.
And that comes from, sorry to cut you, it comes from the Bank of England itself, which admitted that banks don't lend money. But the courts didn't want to hear anything. So that's the big problem we have.
I agree with you, but the problem is the courts are assuming that there's a valid contract in place. They're assuming that you owe somebody money, and that's just not the fact, obviously. So until that can be broken, I think that defending these things is really a hit and miss, and with very small and very shallow victories, because there's always going to be that underlying fact that a judge is not going to want to give somebody a free house, because that's the way that they look at it. Of course, we know it's not a free house, but that's the way that it's being looked at. So you have to attack the problem at its source, and its source is the contract itself. And what does that contract actually entail, and what is it really?
I couldn't agree with you.
That's also what we've been saying. I've been in High Court last year 6 times, and 6 different judges, and every time I've made clear, I said, I don't want to walk away with a free house. I don't want to score anything for free. I've paid some amount, and all I really want is a fair, simple trial. Because in South Africa, we get to motion court, and that's where it ends. So the bank drafts and I draft an affidavit, which in my last application for rescission was 80 pages. They don't even read it. They don't even look at it. The decision's already made. But what I would like to find out from you, because this patent thing is very interesting, and since it all ties in with JP Morgan, who have been running and controlling South Africa as a shop front probably since the establishment of the Reserve Bank. These patents, they should also be similar patents, or they must be logged or registered here as well.
Well, the patent patent system is, of course, you've got your patent system, we got our patent system, but the patent system functions through WIPO, World Intellectual Properties Organization. Now, those are the international patents that of course, yes, J.P. Morgan Chase has many. J.P. Morgan Chase it's interesting that you mentioned that, because J.P. Morgan Chase is they're the trading of the collateral. They're the ones that are setting up the information, the 1003 loan applications, and they're the ones that are setting up the trading platforms for this information on a global basis. And they're also the ones that have the established patents with the overseas market with Euroclear and Citadel Bank. So J.P. Morgan Chase, yes, J.P. Morgan Chase is instrumental globally on what's taking place here. But to find those patents, you want to go to the WIPO site, which is the World Intellectual Properties Organization, and those record the international patents.
Because then that might be another whole angle for people to take here in South Africa. Because like I said, I haven't given up, and I'm still considering doing a late appeal or bringing another application for rescission. And I can bring up the whole patent issue, on its own, like as another legal argument. I mean, not that, that it would convince the courts, but at least something that no one's tried so far. And as you mentioned before, so far, no one has gone in as a plaintiff. See, in all these mortgage agreements or alleged agreements, people default and people don't even get the summons, and in most cases there's default judgment, and people always end up being the defendant, which doesn't look good in the first place. So you already the loser on the battlefield. And what I've been telling people, what we discovered with Brother Thomas as well, is the beautiful claim in reconvention. You do a counterclaim, which you have to initiate before a judgment is granted, where you bring your claim, obviously then, claiming the money back that you've paid, or, claiming damages, which brings you into the field of the arena as the defendant in reconvention, or basically being a plaintiff. And I think with, one can discover a bit more about the patterns. It's at least worth a trial, some more ammunition maybe.
Well, I think what we need to do is we need to redefine our goals and our strategies, and mostly redefine our strategies. And you're right, a counterclaim or a separate complaint, I believe, is the best way to approach this. Obviously, on the basis of the contract and the patents. I mean, patents are in the United States, they're admissible. So are SEC filings. Any government, at least in the United States, any government document or a public document is an admissible into evidence, and it's just pinning down, and we're learning about this. This is new information that's being put out there. So we need to step back and look at it and analyze this information and kind of come together in groups and amongst ourselves and decide, okay, how are we going to fight this now, and come up with an entirely different strategy. And I think that's what we're talking about here is to change things. We have to come at this from a different point of view, and the point of view that we've been fighting it at obviously is not working. It does not garner attention. But if you go in loaded with the material facts and you've got all your I's dotted and your T's crossed, and you can describe every which way they've gone, it's going to be very hard for the court to ignore us for much longer.
When did you say? You said earlier on 890 patents, and when did this start? When did they? Was it also the dawn of the digital banking age, mid 90s or early 90s?
Well, it was about in the United States. Well, I'll say that globally, really, because it did trigger here in the United States, and unfortunately, it came with a ruling in 1998, which is State Street versus Signature Financial, and that was when they deemed that business processes were patentable, and that's what drew the onslaught of patents. I mean, there's literally thousands and thousands of financial patents now. It is not. It's very simple for these Goldman Sachs of the world and the J.P. Morgan Chases of the world to financially engineer a particular investment that could set up and does set up people for default. Why? Because it's more profitable to set people up for default and collect on the insurance policies through the put and call options that they're doing with these investments than it is for somebody to pay their mortgage loan. So it really is understanding these patents is crucial to understanding what's going on with the economy globally, and how the global economy has been literally taken over.
And I think for ease also likened it to a software program or application. So and I'm thinking of these algorithms. So is that these, we keep hearing about these algorithms that run, various like financial programs, and could that be equated with
well, yes, it can be, but it's a lot. Yes, absolutely. The algorithmic processes are patented processes, but it's more simplistic than that. I mean, it's these patents are written words. I mean, they're not mathematical expressions, but they're written words. For instance, let me read you, if I may, from a Barclays patent, and I'm just going to read the abstract. And this is a system and methods for netting of transactions, and that means that they're basically sharing the investments. And if I could just read for a minute, I'll show you how simple it is just by words. And what it says is an aspect comprises a computer-readable memory that stores information regarding a first derivatives transaction between a first entity and a second entity, and a processing unit that calculates, based on the information regarding the first derivatives transaction, one or more parameters for each of a second derivatives transaction and a third derivatives transaction, wherein the second derivatives transaction is between a clearing entity and the first entity, and the third derivatives transaction is between the clearing entity and the second entity, wherein the second derivatives transaction provides a substantially similar effect to the first entity as the first derivatives transaction, wherein the third derivatives transaction provides a substantially similar effect to the second entity as the first derivatives transaction. That's as simple as, I mean, it's complicated. It's all words.
But that basically just legitimizes the Ponzi scheme.
Absolutely. It's absolutely. So when you talk about algorithmic processes, yes, there are algorithmic processes, mathematical expressions for risk calculation, so on and so forth. But what the bulk of the patents do is it basically creates by written word just a manipulation of information to create an investment. So what this is saying here, it's saying that it's basically creating a limitless supply of derivatives based off an initial derivative, and what they're doing in this is they're setting up these second derivatives and third derivatives so that they can trade amongst themselves, so that they don't lose a penny. And what they're doing is it's just like a cotton exchange. What they're doing is they're bidding up and bidding down the price of a particular commodity, which is what we are. And that's what you got to understand. What we are is we're a fungible commodity in this, because we don't have ownership. What happens when we sign that derivative, we become a fungible commodity. And what that means is we have a limited shelf life. And our limited shelf life is, when are we going to default? Okay, so what they're doing is they're creating puts and calls between themselves with guarantees and everything, to where they are unconditionally protected and unconditionally are making money off of these things. And of course, the derivative is us, and we're the ones that are being targeted.
And that's just the truth that you mentioned there, Ken, that we are a fungible commodity and money is being made off us. That is the truth. But
Yes.
when you read that patent, it sounded so complex. And I'd like to quote, Professor or the economist John Kenneth Galbraith, when he said, I'll quickly read what he said. He said, the study of money above all other fields in economics is one in which complexity is used to disguise truth or to evade truth, not to reveal it. And
Well,
this is a classical example that you just gave us now.
But this does reveal it, though. I mean, it's very complex. It is complex.
But you wouldn't come to the conclusion that, in fact, we are being used as a fungible commodity and money is being made off us. That is the actual truth.
That's the actual truth. Now, there's other patents that remember, there's hundreds of thousands of patents. So this is one aspect of one particular patent. There are other particular patents that are specific to, and I don't have one handy with me right now, but that are specific to loan underwriting. If you take in the traditional sense of a mortgage in the olden days, or as people still think it is the olden days, like the olden days, you fill out a loan application, and a human person verifies that loan application. That is, they make the phone calls to the bank, to the credit agency, to verify that you can afford this loan and that you qualify for this loan. And that is the traditional way that it's done. Now, if you think about the aspects of an appraisal, an appraiser, for instance, an appraiser will come out to a home, and they will walk the home, and they'll furnish a value for that, and they'll issue an appraisal report. And that particular appraisal appraiser may have 15, 20 different appraisals sitting on his desk back in his office. Now, by and large, those appraisals don't have any value to it per se to the appraiser. That's just a service that he's providing. But what they've done here by automating this, what they've done is they turn that actual appraisal into a tradable commodity for the full value of that appraisal. So they've created all these separate instruments off of that are intellectually derived so that they can trade these things. So everything has value now in this so-called virtual world on the other side of the intellectual properties. And all this is derived from derivatives, the most basic derivative that there is, which is our information and our signature. And that's really what's really sad and real evil about all of this is we don't stand a chance here whatsoever. So all these trillions and trillions of dollars of debt that's being created, what it really is, what is it? It's all it is derived values that are giving to a database. And then, of course, given a ratings and then sold on the open market. So it is a huge Ponzi scheme because there's nothing there. Our signature, by and large, is not worth any money per se. It's only worth the money that they've intellectually given it.
Yeah, absolutely. Yeah, I just want to clarify one thing. I said, we know they're making money off us. We know when we take a loan out from the bank that the bank's obviously going to make money off us with the interest, etc. But they're making money off us in a way that we're not aware of. I think that is the truth. And
you're right. That what they've done is they've stripped us of ownership. They've not only stripped us of our real property and our personal property, but they've stripped us of intellectual property. And what I see is an ideal lawsuit, really, if you're coming at this from a contractual point of view, is that first of all, you don't owe any money. You owe no money whatsoever because no money was ever lent. And it was paid off immediately. So you owe no money. So really, the lawsuit I see is attacking the contract is then going after and disgorging the millions of dollars that were earned off our stolen information. I mean, really, if you get down to brass tacks, down to the basic facts, what they've done here is not a single person in this world should be going through what we're going through. We should be all bathing in great wealth because of these programs and these processes, which would be tremendous good for the world. But instead, what they've done is they've hijacked it for themselves, and that's why we continue to see this growing percentage between the ultra rich and the poor. Yeah, it's really something has to be done about it.
It's orchestrated disempowerment and impoverishment. Really, at the end of the day, that's what it is. It's actually designed that way, and we need to wake up to that. But the word you use is a very key word you mentioned there, Ken, which is disgorgement, and I think that's really what we should be going for, is disgorgement. If you could just explain that to us, Ken, yeah.
But what I was trying because I always just to interject, in terms of how simple it is, and I've been, telling this to a lot of my friends who've been asking, and the money creation aspect, and do we owe, and is there any lawful debt? Even in the days where there was no digital currency or fiat currency, let's say you really went to the bank and there's a bank manager and he went down to the vault and he got you $500,000 in notes neatly stacked, giving it to you, and you set up a contract and you would, agree to the terms and conditions that you paid back. Back in the days, the contract was basically just a piece of paper that would just establish, well, I'm going to pay this money back, over this and this time. But by the banks just, having, devised a method how to turn contracts into commercial paper, even if the banks lend you hard cash, just by the bank turning your contract into a note of equal value, even then there is no debt, there is no injured party, because you got the cash, lucky you, and they got a piece of paper backed by the cash they gave you, which you haven't paid back, and they start trading it. I mean, that's just like to simplify all things. So they're making profit with a piece of paper that used to be just a contract, and that's kind of how I also explain it to people, how, in a simplified way, that even if the bank would have extended you a physical loan with the securitization method and mechanism, there wouldn't be an injured party.
Right. Right, well, absolutely, and it's more so now because of the fact that everything is electronic and digital. There's nothing backing any of this. I mean, it's all the value that's given is just derived, and of course, where's the only liquidity? The only liquidity of actual tangible value and worth is in your property and my property, and that's what keeps this Ponzi scheme going. Is by creating a channel of liquidity, and that channel of liquidity is the only thing of value, which is our property, our real property, so it's a double slap in the face because we're used as a commodity for their valuing and for their profits, and we're the ones that end up paying for it through our own real property collateral, which is the only collateral to begin with.
Plus, they got insurance companies who then even cover for the alleged shortfall. I mean, that's another huge thing people don't know about. And also, I think you probably know about Simon Goldberg, the Spaniard from England. He used to be an ex-mortgage broker, and he makes all these great videos of calling these ombudsmen and all this stuff. And there was one video also called the Radar of the Lost Mortgage Agreement, or Radar of the Lost Indemnity Bond, which is what I mentioned earlier. With SA Home Loan, for instance, there's not only the MLA, the mortgage loan agreement, there's also an indemnity bond that has been issued and set up, another note that trades for equal amount. And I think that also, when people hear that the 4 major banks in South Africa make 40 billion rand a month profit, it's easily explained also how your loan or Rod Klaas's loan, or alleged loan goes from 500,000 to 93 million in a very short time.
Yep. Absolutely, and you mentioned a key point. Yes, this is the key point here is insurance. Insurance is what drives the system. By repooling and by reinsuring these alleged loans, these derivatives, they're constantly creating a flow of income. And remember what I said earlier about what a securitization really is. It's the taking a financial transaction and breaking it into 2 components. One being an option, and the second being a remainder interest. Well, that remainder interest is your insurance policy. So if they're selling you an option and that's all you're getting is an option, that option, the monies for that option are shoring up this insurance policy, and that's what this really falls back on is insurance. They're collecting on the insurance, and the insurance that they're collecting on is title insurance, fraud insurance, mortgage pool insurance, guarantee insurance. I mean, it's endless. It's endless. So really, yes, you mentioned a good point. Insurance is the.
Who are these insurance companies? I mean, AIG is something that floats around, but I mean, that's something we haven't looked at or into. I think in South Africa, people are so focused only over the last few years on securitization, SPVs, and a few names drop out here and there. But do you know who are these global insurance brokers or companies? What names? Someone who might be one of the branches here.
Well, you've got a Radian Group. You've got MGIC. You got MBIA. You got FGIC, and all of these transfer overseas. I believe they do. I'm not positive on that, but they're the main insurers. And of course, yes, AIG. You've got several different subsidiaries of them. I mean, dozens of subsidiaries. I mean, even the banks have subsidiaries. Bank of America's got over. I printed out their subsidiary list, and it was I don't know exactly how many names there was there, but it was 41 pages, and a lot of the companies on there were assurance and insurance companies as well. So I mean, there's a commingling of these companies between banking and insurance, and it's really and that's exactly what it is. It's a put and call system that they've got in place here, and that's what they're executing. They can't lose, in other words.
It's complete insanity, actually.
Well, it is insanity. They've taken information, and they've used information to write themselves their own economy, and that's what we can't deny it any longer. We have to understand that this is the new world order, so to speak, is basically here. It's here. It's done. And the central banks are really becoming in countries are ineffective because of these automated processes and because of these patents and because because of the internet, the central banking system can be totally almost abandoned, really, because you've got the New World Order, which is already in place.
I've been saying that for a while. The New World Order is already here. It's the illusion is that it's coming. They keep talking about it and just dropping these little hints. By the way, we're on our way.
It's here.
But you know what? I mean, I know this is not exactly a conversation this evening for any like new listeners, the people that don't know this information. And I always like to bring it back to the people because, like we said before in the show, we need to gain the critical mass here and really to stick it to them. At the moment, the advantage they have is that their system is well established. They've put these things in place, and we nitpicking. We heavily into the semantics of it all. At the end of the day, when I look at the movement, as it were, like we all trying to take these people on and understand their systems. And yes, all well and good. But I mean, while I've got the ears of say the heads, what are we doing? How are we going to make this a little bit more accessible to people? Because you know what? For the most part, a lot of middle-class people that I speak to, they're not suffering in the system badly enough just yet for it to actually warrant any sort of effort on their part to affect any change. You know, we can speak to the poor people, yes, but at the same time, it's a lot to digest when we get into these heavy details. We need to really simplify this whole idea. And at the bottom line of it all is, like, there is no money. A patent, a what? I mean, where does it come from? Let's ask these questions. We don't have to talk. We don't have to get spiritual about it. We don't have to go anywhere else. We just need to talk the here and now. And how can we better come together? Sorry, I'm gonna let you go now, Ken. But how can we better come together and make this happen and get the word out there?
Well, I think first of all, we're not just talking about mortgages here. I refer to it as the issue of everything, and that is your credit, your car loan, your education loans, your credit cards, and of course your mortgage loans. So what we're talking about is not exclusive to people that are fighting mortgage default. This is exclusive to everybody and everything. So I think really to really capture the I guess hearts and minds of everyone is to somehow get across an understanding that this affects everybody, and that what's occurred here is your ownership has been stripped, and that you're being really controlled by a credit number, and somehow we got to reach people on that sense. Basically, yes, you're right. You can't talk about Illuminati or talk about all these high conspiracy theories because that's pointless. I mean, that's like cutting the head of the beast off, and he's going to grow two heads back. I mean, you got to at the end of the day, you've got to get people stirred and get their emotions going and get them to take action. You got to tell them why they're losing their house, how they're losing their house, and what they can do about losing their house. So that's really the message to get out is on that level. So I agree with you, Julian. It's how do we get that message out to everyone? And I think it's because people aren't going to read all these patents. It's just an understanding of it. And I think just the more we talk about it, obviously, the more it's going to become start to resonate.
Yeah, I think the minute they perceive something to be too complex, like what we're talking about, it immediately they switch off immediately and they go and watch, sports on TV or something rather than trying to understand it, a bit deper. But anyway.
There's a lot of people who really support the system, and I've been speaking to neighbours, and they said, well, it's just the way it is. Unfortunately, there's interest. You signed a contract, you got something for it, now you want it for free. And for me, the banks I know there's something fishy with them, but when I need them and I can't afford something, there I go, and it's a quick service, and I get the cash. And that is still the mindset in a lot of educated people, and they are not willing to change that because they also fear, especially in South Africa, a lot of the wealthy minority, they run scared that if we shake this up and there's fundamental change, that the whole system will collapse. And at the moment, the South African economy and the society is extremely fragile. So there's people are kind of very tense, and they're rather even the wealthy people complain about the rates and taxes, but I think they rather scrape for the next 20 years until they're dead. And then that's it, and not worry too much about it.
Well, that's a mind control at play there, Jan. People are, as I told Ken earlier on, it's perception deception. I mean, people's perceptions are being managed, and that's really the issue at play. Go ahead, Ken.
Well, you bring up an interesting point about the system collapsing. The system is going to collapse again, and these people that you're referring to that think the system is okay. The sad fact of the matter is they're going to be the next ones to fall. There's going to be, this is going in phases here, and the next collapse is being engineered right now. I mean, they have to have another collapse, and then they have to have a financial collapse because they need to collapse more people because they're going to need more. They're going to need more liquidity in that wheel. You bring up an interesting point about that. It's how do you get the people that think that the system is fine, or what I call them the sheeples, still whose heads are in a cloud over this, and then you got the other people that fear economic collapse. And well, you got to make a decision at some point in time. I mean, if everybody stood up today and marched in the streets, the system's going to collapse. But maybe that's what needs to happen. I don't know. Something needs to be done to change things, and to make and that's going to entail some pain.
I think the question is, if somebody says, and I've come across this before, where people say, yeah, but if you stop paying your loan, the whole banking system is going to collapse. And then I say to them, but can you explain to me how that's going to happen? Explain to me the mechanism. And not one of them could actually explain it to me. And they're just saying something that they heard, probably they're repeating something that they've heard before, that if everybody stops paying their loans, that the banking system is going to collapse, the economy is going to collapse. Then you say, but how is that going to happen?
Yeah, but in a way,
if you don't pay your loan back, you got more money in your pocket, and you can spend more, you can consume more, and that'll make the economy grow.
But you see that it comes back down to the fundamental that a lot of people, like for instance, and I love my dad to little bits and pieces, but as much as I can put it in front of him that there is no money, he doesn't really, it doesn't quantify with him, you know what I'm saying? So at the end of the day, people believe you need to give back the bank what they gave you, because surely they had it. I mean, we wouldn't live in a world where there's no money. You know what I mean?
Well,
it's crazy. I did a little interview with a friend of mine, just because I've kind of been doing these interviews out in the streets for the show and stuff. But I asked him, for instance, okay, so why do you think we pay tax? And he gave me the regular answer. And yes, he thinks we pay tax to make roads and hospitals and healthcare and education and all this. Okay, and then I told him, okay, so what if I told you that that's not true? We pay tax to pay back an imaginary loan that somebody gave us. And his first response was, that's crazy. I would need a lot of proof. I'd need to see something, because people see believe by seeing, in order to make me think that that's the case, because it's ludicrous. It does seem ludicrous. I mean, we know this, but for many people, this idea just can't sink.
But then, Julian, you should go back to him and say, but can you give me proof that the tax you're paying actually goes to build bridges?
But you see, he doesn't feel the need to prove it, because he believes, because everybody's doing it. It's like that law you were referring to last year. Some doctors, some guy's law, what's it called?
Milgram's law.
Milgram's law. Yeah, it's like Milgram's law. So everybody's doing it. Everybody's walking off to the edge of the earth and jumping off. There must be something there. I mean, where the hell do you think all these people are going to? You know what I mean?
It's all mind control. It's teaching people the wrong things, actually.
And that's that's the thing. Like, sorry, Ken. I don't want to cut too much. I try to just listen. But at the end of the day, we need to get this information somehow across to these people, like in a way that they can digest it. You know what I mean? And still, I think we fail to do that over and over. And that's the only way we're going to get the critical mass on our side, is that we never simplify things. I mean, we started a show this evening, and the title was very simply "Banking Secrets Revealed." And we dive straight off onto the deep end of it. You know what I mean? This is what we do.
It comes down to each one. I mean, we had meetings for 2 years regularly that work quite well, but you start talking about, to a group, about something like this for longer than 10 minutes, people drop out. And it's much better to bump into someone at the supermarket you haven't seen for like 6 months, and they ask you what you've been up to, and then you kind of give like a 15-minute monologue, and they actually do get it, and you exchange email addresses, or when you haven't seen them for a while, and forward them stuff. And unfortunately, it's the only way. Or the other way would be to contact South African Defence Force personnel and surround the SABC, and then you would look like a coup that you've taken over the communication centre. And even if you broadcast a 10-minute message before they shut everything down, and you would tell them about the banking fraud, then half or even 70% of all people would still think, oh look, these are terrorists. They're forcefully taken over our communication, forcing this message onto us. And handing out flyers. We had New Era, New Economic Rights Alliance, Scott Kundell and Michael Tellinger. They've got a database of 150,000 people who at least have shown interest in mortgage fraud, banking fraud. A lot of them also dormant. They looked into it and they're not willing to take the risk. There's only a few of us who actually went that far, and actually all of us lost our houses. And even people like Dennis Jenkinson, who's now also next week is one of his guest houses up for auction, who's been fending it off for like 3 or 4 years. As long as these people are in positions, and I've all been saying, especially in terms of the global economy, as long as the guys from JP Morgan or the Rothschilds or Rockefellers run these global algorithms who dictate and stage and rig, the Dow Jones and Nasdaq and gold price and oil price, and nothing much is going to happen. It's looking fine in the media, even though companies and factories are shutting down, but people just see the indexes and go like, oh, it's all doing fine. Look, it's all just recovered miraculously. And that's for me to round this off. For me, and I know you've been involved with Rebecca and New Earth Nation, and I think that is one approach, since we are now actively looking for a location to start a micronation and to extract ourselves from all of this, and actually, let it be, let it collapse or implode on its own, as much as that would be partly complicity, or you kind of, after you've seen what's wrong, and kind of been rendered helpless, but rather focus on starting something new. What a lot of people say. I'm not that kind of guy. I also, when I see something unethical or wrong, I want to eradicate it, remedy it, or whatever needs to be done. But I think it looks quite bad, especially here in South Africa. Even with the latest development of Commercial Crimes Unit, and some cases that got publicity, and there were people like Yvonne Oberholzer, who's had a constitutional court case, and people rocked up at her door and knocked her husband down at 9:30 in the evening, and they said, if your wife continues with the court proceedings, we're going to break her knees. And these are people hired by the banks. And Ian Bruckspear, who had a trial, was the only guy who was ever granted a trial. He had a pet report over him, and they said, if you continue with your trial, we're going to set you on fire. This is the that's what they resort to.
Jan, let's not also be too pessimistic, and let's remember as well that I think it was last year, if my dates are correct, last year, that we had something like the Ubuntu party on the roll. Not that that's the answer, but it at least can start a conversation. We already have a lot more credibility than we had ever before. When you say, like, who are you going to do this stuff with? When you talk about all this stuff, and you say, look, we had someone that understands this. Michael Tellinger, he was on the voters roll, So there is a little bit, there's a step forward, and we're using these tools, we're using the internet, we're trying to speak to people, and I get the micronation thing, dude, completely.
Yes, as you mentioned, Michael Tellinger, I only met him once personally, and maybe he's listening to now, when you were here listening to recordings, as he's also on the New Earth Nation law faculty and been involved there since the early days, and he has got a property called Vata Farboven, and he's now also said he's bringing in a free energy device that's just been built. Why doesn't he start a micronation with his land parcel? I would like to put this out to him, and that would be a good start, because to me would be a good training ground anywhere with a huge enough land parcel to start.
Anyway, we can come in, yeah. Brother, you want to come in?
Michael has, he did put out an ad last year for people to come and join them on their parcel of land. So he has made it available. It just hasn't been much interest. Maybe you should contact them.
Anyway, on that point, gentlemen, Brother Thomas, is there a last point you want to make? What is your solution? What do you feel is the solution to this whole situation we find ourselves in? Personally, the system is so rotten, I've in my assessment, that I don't think we can actually fight it. And we should just sidestep it and build something new. But brother, what's your opinion?
My opinion is that we are finally coming together. Over the last 2 years, if I look at what's been happening over the internet, there's been a sifting. We've had a lot of so-called whistleblowers that misled us over the last 2 years.
True.
And now that all the rubbish has settled, we can actually see who the people are who are persisting. So I believe in the International Tribunal for Natural Justice. we need an international group that we can all support. So please go there, itnj.org. Sign up for it, register, vote, whatever. It's, as far as I can see, it's our only real remedy right now. And we need to tie up all these small groups all over the show, and we need to network, you know.
Can you go ahead, brother?
So in the States, Ken, have you heard of Neil Garfield?
Yes, I have. I know. Yes, I know. I'm aware of Neil Garfield, and I know that he's has recently come out with a way to rescind a loan, and
Yes,
and my obvious response to that is, why rescind something that doesn't exist to begin with? And that's an issue there. I mean, if you go and you rescind a loan, then you're basically killing yourself from getting any coming back and suing on remedies for a contract. So so there's that school of thought out there. From my information and my research, this isn't the way to approach this thing. Is to be realistic about it and get down to its simplest terms. That's the contract. And I think that in terms of what needs to be done here, I think that it's not an easy process. Obviously, it's not. The first, as Brother Thomas said, that the people are beginning to wake up. I mean, I'm noticing on the internet, people are getting angry and people are starting to become aware of what's going on here, and they're looking for answers. And I think that if we provide them the answers, that just helps us out even more. I think that Fayez and I was talking before we went online, and I mentioned to him about protests, and I mentioned to him about a Wells protest that took place out here at Wells Fargo, and people were holding up signs that said "Save our homes" and "Stop the fraud." I think that if we target protests like this and make them more effective by putting don't say stop the fraud, expose the fraud, put their walk around with placards of their patents and what patents they're using, what processes they're using, and talk about the derivative aspects of this, that we're a commodity, and start protesting to instead of just holding up signs just generically, let's expose in these protests what their frauds actually are. And I think that passersby will see that and they'll become interested in it. It's a matter of growing awareness, and I think that if we go in that sense, that yes, it's a long process, but we don't need a mass population. We just need enough to tip the scales of justice.
Exactly.
Like I don't know if you know what's his name, Edward Griffin. And he said you just need 3% of the population really to make a difference. You don't need the whole population, yeah.
Exactly. And to do that, if we target these protests and the people that are protesting, and they start and actually expose during their protest what they're doing, expose the patents, because that's gonna draw more interest. So I think it's really just a matter of properly informing people and properly passing the chain of information along. Because it's not.
Could you maybe just in a short email maybe send to Faiz, you said the intellectual property organization, what did you say? WIFO, yeah, and maybe also the names of these insurance companies you mentioned. Just drop that in a mail to Faiz. I'd like to do a bit more digging there. And
my pleasure, no problem.
We've got some forums here on Facebook as well, like a 4,000 strong group dealing with securitization and banking fraud. So yeah, there's some good up people there as well.
If you have a website associated with this, or you have your Facebook page, I'll be more than happy to attach a whole series of documents for people to look into. More than happy to. That's what needs to be done. Spread this information along.
Cool.
Thanks for that, Ken. Yeah, that'll be great. Thank you.
Oh, my pleasure. Oh, no problem whatsoever. I mean, I agree with you too about an international body like with Adventures in Sovereignty. I think that's a wonderful organization that, and I think that's what we need. We need to come together and collaborate and bring all these small little, I don't want to say faction, but small little groups together. I think that one of the things that we need to do also is we need to abandon foreclosure defense. We need to abandon that because we're never, ever going to win on that line. And in terms of rescission is concerned, why rescind a contract that doesn't exist is my obvious response to that. And more so, my response is why, in terms of foreclosure defense, why has nobody ever gone back and gone back and looked at the contract? Everybody automatically assumes that that there's a valid contract in place, and we're assuming that there's a valid agreement, so we're defending this valid agreement. But why has nobody on the defense side, on the attorney's side, why has nobody ever gone back and looked at the contract? And that to me, that tremendously bothers me.
That's been my position from the beginning. I mean, the contract is not valid.
Well, also here in South Africa in particular, and ABSA, one of the four major banks, they've been telling people for 5 years that this original loan agreement, or the true bill, whatever you want to call it, burned in a fire. It turned out, and there was a fire. Then there was an arson. I think there was arson at this docu-file at some stage, probably they tried to get rid of some documents. And that's basically the key question in many people's proceedings, to produce the original wet ink document, the original agreement that both parties should have signed. It also turns out that in most cases, when you signed that thing, no one from the bank actually always ever signed in your presence. And these agreements just don't exist. And that's basically where it goes back to. It's based on a written agreement. And now we had the first cases where it's clearly based on a written agreement, and then the judges all of a sudden say, I don't think it was a mortgage but a credit card, where they're saying, well, the original is missing, but isn't it also based on an oral agreement? All of a sudden, I mean, they want to get away from oral agreements because it's not safe. That's why we're bringing everything to paper, and we've got a paper trail. Then the paper goes missing deliberately on purpose to make money and securitize. And next thing, the judge is covering up for the banks, saying, well, isn't it also based on oral agreement?
Well, think of it this way with that paper loan agreement. That paper loan agreement is entirely worthless because what they've done is they've created two separate transactions here. Let's break it into two separate transactions. The one is the paper document that you sign. The second is that document that they scan into an electronic, what they call a smart doc. So you've got two different, and right there that destroys the agreement to begin with. But they take that paper loan document and they throw it on a shelf, or they throw it in a file cabinet, they throw it in a warehouse somewhere, because that's not what they're trading. What they're trading is that derivative electronic copy, and that's what they're trading, and that's what they're making money off of. So when you default, or when you allegedly default, what happens is that derivative, the person that has control of that derivative, transfers the title. That's when your signature is. So if you want to think in terms of an agreement where that opposing signature is placed, that opposing signature does not occur until the moment that you default. So in other words, if in my case the mortgage loan was in 2005, the alleged default was in February of 2008. So what happened here was they took my paper loan document, they threw it on a shelf, and they were trading the derivative into all these other complex derivatives, just like it were a book. I mean, imagine taking your mortgage loan documents that you signed and Xerox copying all of them and putting them in a package and sending it off to a local bookstore, and that local bookstore is just stamping the same price on every one. That's the equivalent of more or less what they're doing here. And so what that paper loan document is just sitting on a shelf. And when you default, when the default comes, when the assignment of deed of trust occurs, that's when the title transfers. That's when the derivative closes out, because it's more effective and more profitable to trade that as a derivative than it is to trade it as a whole loan, if that makes sense. Hopefully that makes sense.
Yeah, no, that makes sense. That's the whole scheme.
Quite diabolical, actually.
Can I just interject here with something from our little chat room? Lita, I'm just going to pronounce it as I see it. Lita says that she's doing this on Wednesday, no valid contract, or he's doing this. It says doing this on Wednesday, no valid contract. I just wanted to know if there's any quick response to that, guys.
Well, there's no valid. I mean, this is obviously we're not giving legal advice here, but there is no contract, and to back it up with evidence is the evidence is all around us. We just got to look at we got to look in the right directions. Now, in terms of I don't know about you're familiar with the PSAs down there, correct?
No, we're not aware of PSAs.
Well, the pooling and service agreements that for the loan trusts. that they're foreclosing in the name of?
No, we're not aware of those.
Well, it's usually in the bank's name because the bank doesn't disclose their security, the SPVs or the investors who purchased the loan agreements. So it's usually in the name of the bank, I would imagine. Is that not correct?
Well,
that's the foreclosing entity. The foreclosing entity is always the bank, even though that's
well, yeah. So the trustee as a trustee, and the agreement, and these are in the United States. What everybody looks to the PSA in defending foreclosures, but those agreements aren't the agreements that we want to be looking for. The agreements that you want to find and validate a contract and establish what these contracts really are is you need to go whatever is your equivalent to the SEC in your country, and you need to find the mortgage loan security agreements, the trust indentures, the assignment and assumption agreements. So those are the agreements that establish these frauds that are being committed, and it establishes, going back to our original document, establishes because we're written into these contracts. We're the borrowing base. So these are the contracts to prove an agreement is not valid, is to start digging up these particular contracts. And as a matter of fact, what I'll do is I'll post a couple on your site so you know what I'm referring to. And you read these contracts, and it is Morgan Stanley one in particular that comes to mind. It's a mortgage loan mortgage loan security agreement, and it blatantly says in there that we can rehypothecate these notes as many times as we want without any discretion whatsoever. So I mean, it goes in a great description about the cover-up and the garnering of information and what they're doing with these so-called alleged loans as rehypothecation. And rehypothecation is basically just creating the instrument time and time again. So it really is, it's the equivalent of a copyright derivative, really. It's the same basic thing. It's just different verbiage there.
But Ken, isn't that also fraud on the investors? Whoever's purchasing, these copyrighted agreements, isn't that fraud on them also?
That's a good question, but here's one thing I would say to that. I would say that an investor that's purchasing an investment, he knows he's buying a derivative investment. Okay, we don't know we're signing for a derivative investment. We're not disclosed that we are the derivative investment. So who sustains the greater damage?
Well, that's the whole point. I mean, there's non-disclosure. That's the whole point, and that's what invalidates the agreement. Right. And I asked Liata, he's posted a point here that he's doing this on Wednesday, no valid contract. I'm not sure what that's all about, but if they can expand on it, if they're still listening. But for me, there is no valid contract. There's non-disclosure, so it invalidates the contract. There's no meeting of the minds. There's no disclosure of material information.
Just for the interjective phase, there's 8 elements that constitutes the creation of a contract. Number 1, offer, acceptance, intention, sufficient and equal consideration, mental and lawful capacity to contract, legality of purpose, gave genuine consent, knowingly, willingly, and voluntarily. You didn't know. So there is no genuine consent, certainty of terms and conditions. Now, if whoever you're contracting with doesn't give you full disclosure on the facts and they're hiding things which you don't know about, that's fraud. So,
that's the point. That's fraud 101, actually. Yeah.
That's the point. So I mean, it's really to take people away from this foreclosure defense and defending an assumed valid contract and pointing people to the contract and start pointing out the frauds within the contract, because it's the most basic agreement there is. The most basic, I guess, tenet of law there is agreement between two people.
Well, I think that's also where SA Homeland in particular, they got very clever, because on page 27 of this alleged agreement that I've signed back in 2011, without my knowledge, when I was then asking in court on various forums about the original agreement, then all of a sudden I was reading through the scanned copy that then was emailed to me. On page 27, where I diligently initialed at the bottom of the page, it reads in paragraph whatever number that I waiver my right to ever view the original agreement again, and now that the best copy thereof is the legal representation of this agreement. I mean, that's against contract law. It's, I think, even unconstitutional. As you said, two parties sign a contract, and each one of them should have the right to view that contract at any given time. Whoever keeps the original. I mean, it's like such a massive con, and even that, I brought that to the attention of the courts. They don't want to hear anything about it.
Well, think about the terms of think about ambiguous terms also. Within our contracts over here, it refers to real property and it refers to the generic term property. Now, in terms of ambiguity, we assume that the word property refers to personal property because we're assuming what we're signing, or we're reliant on what we're signing, is a negotiable instrument, and therefore personal property. But there is one other term that you and I may have heard before, but we have no knowledge of because it doesn't apply here. Is the term intellectual, and that's I think is a good segue into a contract dispute possibly. Is drawing a conversation to that. Drawn attention to that word property as ambiguous, because what they've lured us into signing, a derivative which is an intellectual property, and that's a huge non-disclosure. And so, as far as I'm concerned, it's an obvious one once you point it out and once you understand it.
Yep, absolutely.
Yes, Ken, you made a good point there regarding property, and that's something that I'm preparing for our case, which is. And the property they're referring to in South Africa, it's a classic. We call it certain property. And if you go to Black's Law 4th and you go and look at the definition of the word certain, it's everything that is uncertain.
Yeah. Well,
so the property they're referring to is a piece of paper, but it's not the private property, the land, and that's
right,
one of the aspects we're going to focus on in the case.
Right,
anyway,
because that's what you're signing is you think you're signing a real property loan agreement, but in effect what's happening is you're giving up ownership of not only your real property and your personal property, but you're allowing them to use your intellectual property to create derivatives.
And because you were not aware of that wasn't disclosed to you, Ken, that makes it invalid, basically.
Right, so that's how they enslave us because we're not aware of this. This is how we're enslaved because of course once you're in the system and once you're foreclosed upon, your credit's destroyed, your character's been defamed. So I mean it really and now you're at a point of you're an enslaved at this point, and you really are because you can never escape this. So again, it comes back to grassroots of drawing people and making people aware of this stuff.
Yeah, my position is that, what you say there, I just don't care about that because I've asked the banks questions. They haven't answered my question. And I always say, as a doctor, if a patient asks me a question and I refuse to answer that patient's question, then I cannot expect that patient to continue being my patient. And secondly, come to me for a consultation and still pay me. That's just unreasonable. I mean, it just doesn't make any sense to me nor to any patient to expect, the person to be your doctor when he refuses to deal with your problem. And so that's the way I see the banks. Mm-hmm. When I ask them questions, they refuse to answer my questions. So whatever they do after that they may think it's doing something, but in my mind, it means nothing, whether they harm my reputation, whether they, that's just their world that they live in. But the point for me is that you haven't answered my question, deliberately refused to answer my question, so you have no credibility in my eyes. That's the first point. Anyway, guys, we're nearing
Well, see, that's why you got to...
Yeah, go ahead.
No, go ahead. I'm sorry.
No. There was just two more points. We actually passed the end 1 hour ago, which is just great discussion. I must thank everybody who's taken part in the show this evening. Thank you very much, guys. We got a question on the chat box here from Dave Henry. He says, has anyone ever laid charges of theft against the banks when properties are seized based on the fact that they have taken something they do not own and have resold tentatively stolen goods?
I can quickly maybe answer that
one. Okay, go ahead, Jan.
That was something that Adil and Lohfeldt Senatorial tried last year to go to the NPA and they had charged a criminal charge of fraud against F&B. And 2 months later, they were told, no, it's not the bank that needs to be investigated, it's them, they committing the fraud. So this year, with this investigation now happening by the same commercial crimes unit, who are now looking into 600 mortgage bonds and they're all fraud, I thought the game had changed. So I went to see an advocate with the NPA, and I basically, presented my story, and he said, well, I'll tell you what, I can't open up a case here, but I advise you go to the local police station and formally lay a criminal charge of fraud against SA Homeowners. So I went there, I went to speak to a captain, I went into office. I've been chatting to her for like 45 minutes, and one of the most friendly South African police officers or captains I've met, African lady, she had a keen interest, but when she read through some of the documents, she started reading and she said, Jan, there's long words here with an S, I said securitization. She said, well, I've got no idea what that is. And then she took the documents home with her and she said, well, she's going to read through a bit more and then decide whether, the case has got merits or not. It's already someone who already exposed herself or is not having knowledge about the matter, but then assuming the position of a judge and telling me whether I can open up a case or not. then she was honest enough, and she said a few days later on the phone she was busy. No, she forwarded it to Captain Gendling, who is another captain with the African police, but he's with the legal department. So he is a guy, legal department, South African police. He ended up with a whole stack of information. I waited for another 2-3 weeks, and eventually he was supposed to call me. He had a meeting with the other Captain Demoy, and I did speak to him beginning of this week. It was, I think, Monday. And same story, these are hardcore conservative people trying to patch up and, uphold the system. And he was saying, so whatever investigation, I don't even know what securitization is. What commercial crimes in Pretoria? Okay, I will find out. First, he was still encouraging me that I must present the proper statement laying out, the way I got defrauded or the fraud was committed. And in the course of the conversation, he eventually said, well, actually, it's pointless for you laying a charge because, I can't see any fraud. But once you succeed with your civil matter, if you succeed in the civil court, exposing their fraud, then get back to us. Then we will be onto them like pit bulls. So basically, it's pointless actually going there and alleging, because you would allege fraud. And when I went to see, I presented him this document that was issued by this X website, and basically the advocate Lohfeldt said, well, it's a lot of allegation in here. And I said, well, isn't that how you investigate a crime? Even if it's assault, someone assaults me, but there's no evidence and witness in the first place. If you're the police
I'm gonna have to cut in here. You're breaking up really badly on our side, my side of things at least. So,
okay, sorry about that.
But we've also approached our 2-hour mark, and I don't want to cut anybody's thought here or whatever. We've still got some questions coming in from Dave on the chat box, but I don't know. We've got about 5 minutes left at about 2 hours, which I think is an adequate time for this podcast/broadcast at the moment. And so we just want to sum things up. I firstly want to thank all of you guys for being with us. It's been a fantastic conversation. This is more of what we need of, I think, and it'll be out there. It'll be out there on the interweb for everybody to access. And this is really, the meeting of we crossing the ocean here using technology. You know what I'm saying? We're bringing people with expertise from other places into our backyards, into our homes. So, fantastic conversation. Thanks, everybody, for being a part of it. Thanks to Ken. Thanks, BT. Thanks, Jan. And we're going to do more of these. Are you guys keen?
Oh,
yes.
Thanks.
Thank you very much. I'd love to.
Go ahead, Ken.
Thank you very much. I would love to do more of these. The more we can get this out there, the better it becomes for us. The more people become aware of this. I thank you for having me. It's a wonderful opportunity to speak about this globally.
But I always do stress that we're gonna do these deep ones. We'll do these deep shows as well. And we don't just talk finance here on ZATR Talk Radio. We cover a range of topics from health and wellness, anything alternative, basically, anything that's got an alternative slant. And for the most part, most of the world does have everything's got that alternative. Everything's a cartel, and most things are just dictated to us by the cartels, the various cartels that run them. So yeah, we've had a good time on the show this evening, and like we said, we're going to do it more, and we're going to maybe simplify it in the future a little bit more, and do our best to bring and I believe that as a movement we need to jump on the things that are affecting people now as well as it happens. You know what I'm saying? I mean, we just recently, I don't know if you know about this, Ken, but in South Africa we dropped the statue of Cecil John Rhodes. I mean, that was powerful stuff by university students. They don't really know what they've done. They jumped on the racism bandwagon and whatever. But at the end of the day, they've dropped one of the highest ranking Freemasons there was to out there, and somebody that's affected the world in such a bad way, and they had him fall. So I believe there's hope for us. We can definitely move forward. People are gonna wake up, and we're gonna continue doing our little bit to educate and to keep you informed as to what's going on. Okay.
Well, thank you guys. Thank you, gentlemen. Thanks, Ken. Thanks, Jan. Thanks, Brother Thomas. Thanks for the great discussion. Appreciate it. Thanks, Julian.
Okay, so we'll do our work in the background to make sure we all know who's coming back when. But until the next time, guys, thank you so much for being with us, and you are listening to
ZATR Radio.
Follow us on Twitter at ZA Talk Radio.